Last Friday, for the first time in 3 years and 6 months, South Korea's benchmark KOSPI surpassed the 3,000 mark, long considered a psychological resistance level. Not only that, the KOSPI closed trading above 3,100 on Tuesday. Although the index has not yet reached its previous record high of 3,300, expectations surrounding the local stock market are fueling momentum. So for more on this, we're joined by our economic correspondent Park Junan in the studio with us. Welcome, Junan.
Great to be here, Eunji.
So Junan, it seems the market is extending its post-election honeymoon rally, right?
That's right, Eunji. So South Korea's benchmark KOSPI, for the first time in 3 years and 9 months, broke 3,100 on this Tuesday. It's also notable that South Korea's stock market ranked first in returns for June among G20 countries, coming in above 15%. And this is by far the highest increase among all G20 countries, as no other country saw gains exceeding 5% in the same period. Now, among the various factors that led to the rally, experts point to eased uncertainties and expectations surrounding the new Lee Jae-myung administration's economic policies as key reasons for the surge. Take a listen to what an economic analyst has to say about the momentum behind the rally.
The weakening of the dollar, coupled with a cycle of fiscal policy expansion and interest rate cuts in emerging economies outside the U.S., have created a favorable environment for investment. After a period of political uncertainty, the snap presidential election removed some of this and resulted in a strong inflow on policy expectations.
So Junan, I see the reason why Korean stocks underperformed, but how did it go up over 30% in just a few months?
Yes, Eunji. So the first half of 2025 in South Korea was marked by both internal and external uncertainties, which the market is extremely sensitive to. As mentioned earlier, the political instability caused by the martial law declared last December by then President Yoon Suk-yeol pressured investor sentiment and led to an outflow of foreign funds. Moreover, tariff threats from U.S. President Donald Trump also negatively impacted investor confidence. In early April, Trump announced plans to impose 25% reciprocal tariffs on Korea. The announcement heightened concerns about inflation and contributed to the weakening of the competitiveness of South Korean exports. However, Trump temporarily suspended reciprocal tariffs for 90 days, just days after his initial announcement, leaving room for negotiation. Since then, stock markets around the world, which had plunged earlier, began to rebound. President Lee, who has long promised to usher in the KOSPI 5,000 era, declared the start of this new chapter as, quote, a new period with new hopes. Take a listen to what he said last week.
오늘 대한민국 주가가 2,992.1을 찍고 있던데 새로운 기대로 오늘을 기해서 3,000포인트를 넘어서서 새로운 3,000 시대로 나아가면 좋겠습니다.
He also visited the Korea Exchange earlier this month and highlighted the importance of dividend payouts and a zero-tolerance policy for stock price manipulation, pledging to lead the market through various reforms, including shareholder return policies and amendments to the Korean Commercial Act.
So now we know that President Lee Jae-myung is fully committed to achieving KOSPI 5,000 during his term. What measures do you think he should take in order to achieve that throughout his term?
Of course, it will be crucial for Lee's policy pledges to be implemented swiftly. Take a listen to what a chief economist had to say about KOSPI's long-term growth outlook.
While the government is trying to stimulate domestic demand through a large-scale supplementary budget, measures such as expanding AI investment and improving systems related to commercial law, amendments should be implemented swiftly. Moreover, the early settlement of tariff negotiations will help lay the foundation for achieving this goal within the next 2 to 3 years, if not immediately.
So Junan, before I let you go, what are the obstacles that could hinder a further rally of South Korean stocks?
Actually, there are some variables that could further prevent momentum of the market. For example, the U.S. has indicated a possible extension to its pause on tariffs to go beyond the July 9 deadline. Also, although there's a ceasefire in the conflict between Israel and Iran, uncertainties could be reignited if both sides clash again. Take a listen to what market experts have to say about factors that might affect the local market.
In the case of wars, we'll have to wait and see how long they last and how predictable they are, as both factors will affect the economy going forward.
I think the overall U.S. economy and tariff policy, along with South Korean companies' second quarter results, will be key factors in determining how our stock prices move in the third quarter.
Investing always comes with both opportunities and risks. In times of rapidly changing markets, I encourage viewers of our channel to manage their assets wisely.
All right, Shannon, thank you for the wrap-up today. We appreciate it.
Thanks for having me.